Hi traders, and in today's video I'm going to be walking you through how to trade ranges, and I'm going to also give you some of the advantages of trading ranges and actually look at some of the disadvantages of trading ranges. So let's just look at the charts now. And the great thing about trading ranges is it's very simple for you to do as a forex trader. So if you're a new forex trader and you're looking for a sort of easy way to kind of make it into the markets and actually start making some money, trading ranges is a great avenue for you to go down. It's not advanced, it's very simple, and anyone can pick out these opportunities. And to show you how easy it is in today's video, I'm actually going to walk you through it looking at a simple chart, a simple daily chart here, as you can see on screen. This is a chart of the FTSE 100. Okay, it doesn't really matter what instrument you're going to be trading, if it's a currency or a stock or commodity or whatever it is. It's all pretty much the same. This is going to work on every time frame. I suggest the higher time frame you go up, the easier it is to actually go through. And what a trading range is very simple. Is what happens is when price is stuck between two regions. Okay, and I've drawn two black lines here, one black line here, one black line here, to highlight the two areas. So what tends to happen is price will tend to stick between these regions. As you can see, the market moved up from this particular region. It had moved up in the previous times, but it started to become significant here. So the market pushes up to the top where this black line is, and it starts to sell off, and it actually sells off very quickly. Now, I'm not telling you to take a short here, because there's no way we would have known to take a sell position based on trading ranges. But what we actually do know is that price moved up from this region and it stopped here. So as the market's dropping off, you can draw this line on, and you can draw the line on up here and say to yourself, okay, these are two potential regions. The market comes back to this region, and all you have to do is buy at this region. Okay, and you can see from below the line, the market doesn't really go beneath this area too much. Okay, so this is minimal risk here, this little region here, if that, compared to maximum reward. Okay, so look at the little risk we're putting on the table potentially compared to the amount of pips we can actually be making if we're trading a range. So what do you know? The market pushes up, and where does it stop? It stops right in the same region from where it dropped from before. So what you can start to see is when you pick out these potential regions and you pick out these opportunities, you're starting to get ahead of what's actually happening. So as soon as the market's bouncing off here, you obviously have the opportunity to decide where you're going to put your potential take profit. You can say, okay, I'm going to be looking to take profit out here, I might be looking to take profit out here, or you might be trying to get the full scoop of the move. Well, that's entirely up to you. I wouldn't recommend always going for the full move, because you never know what's going to happen. Normally going halfway is more than enough, and as you can see, that's at least 4 or 5 to 1 in regards to risk to reward. So you'd be risking this little bit to make it around 5 to 1 in this region. And as you can see, this is a daily chart, so it's only a matter of days that this would have taken to actually get filled. And like I already mentioned, this can work on any time frame, so don't be alarmed, it works on any time frame. So look what happens here, and this is one of the first disadvantages I'm going to talk about, because we've already established an advantage of how it's so easy to pick out these levels and pick out the trades. What tends to happen sometimes with ranges is it won't go all the way, and this comes back to the point I just made about profit taking. So imagine if you took a sell position here, knowing that the market had dropped from here vigorously before. You can see price drops fairly quickly, but look, it doesn't drop all the way to the bottom. So if your target was actually in this region, you might not oh, it's not even a might. You wouldn't have got filled on that trade. But if you had decided, okay, I'm going to trade half the range, you definitely would have got filled. And that's one trade now. That's two trades you would have just been making money off. And where are we right now? So the market has pushed back up to this region, okay, and it tried to break through, didn't have it the first time. It's tried again, and it tried a third time. And all of this information, this is 3 times it's tried to break through the region, and it hasn't. So that's 3 times the market has tried to move up, and it's been getting rejected. So more likely than not, what do you expect? Well, with a range, obviously we're talking about trading between the 2 regions. So if you put a sell position on here, not quite halfway, but nearly would have got filled, okay, and we're just waiting. So right now it's July 2014 as I make this video. We're looking to see what the FTSE 100 is going to do in the future. Obviously, going by what's happened in the past, we're expecting the market to drop back down to this region at some point. And I just wanted to make this quick video to show you how easy it is to actually pick levels out, okay, pick out regions like this where price gets stuck between, and obviously take trades. What I want you to do, if you go away, just for more context, you can actually pick up, okay, just go and look at a chart, any time frame, I'd say 15 minutes and above to get the best results, okay, and just try and pinpoint levels where prices is stuck between 2 regions, and draw 2 lines on. Just draw a line on the top, draw a line on the bottom, and see what actually happens. Okay, if you're practicing and you're not quite a live trader yet, all you have to do is draw the lines on and take a demo trade and see how it goes. If you've actually got a live account and you are willing to test this out, maybe you don't want to put your minimum, your normal risk on. Maybe you're going to put half of that on to see, and you're going to be testing that out. But range trading is a great thing for you to do. It's so simple. There's no, like you've seen how I've done in the last couple of minutes. It's just simply drawing 2 lines on and buying at the bottom and selling at the top. This is the simplicity of trading, and I don't want you to start making things harder than they need to be. You can see, look, it's just simple sell, simple buy, simple sell, simple sell, and live with the results. Okay, if you take one of these trades and you lose, okay, you lose your minimum risk. If you win, well, you're looking at 5 to 1. If you're trying to go from the bottom to the top, that's 10 to 1. Okay, sometimes it's going to work, sometimes it's not. What you can do if you're looking to go for a full profit is, as it goes up, you can start to move your take profit. So as it breaks through the 50% of the range, you can move your take profit to 50%. Okay, and if it gets knocked out for a take profit at the end of the run, then you can do that. If not, you take your half of the range and you live with the profit. So that's pretty much it. Short video here just to give you some insights on how you can actually trade the range. It's a very simple strategy, and you can start making money trading the forex markets. Thanks for watching the video.